What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you've hit the subscribe button and the notification bell. That way you're notified whenever we release new videos. We do release videos every night throughout the week and once on the weekend, but we also release bonus content from time to time, so having that notification button hit will let you know when we release that bonus content. Make sure you're following us on X at Bullish Chips, where you can get real-time updates about our entries and exits for not only scalps and day trades, but mid and long-term trades as well. We also provide commentary throughout the day about other information, internals for QQQ, just other notes that we have about the price action and the current day for SOXL, and anything else we think might help traders trade throughout the day. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off of our trading method and trading strategy. If you are new to the channel, our strategy is based in the strat, and that is a real easy concept to learn. There's only 3 things a candle can do, be a 1, a 2, or a 3. There's like 6 main reversal patterns. So if you're not familiar with the strat, there is information in the description to this video, free PDF that you can download, as well as the link to Rob Smith's YouTube page, who's the inventor of the strat. So hang with us through the video, and I'm pretty sure by the end of the video you'll have a hang of the strat. And then if you want to do further research or investigation about the strat, you can look at the information that I've provided in the description to this video. So I guess we can get into the charts. Today was kind of a ho-hum day, intraday. We did have I guess overall green price action, but it was all within a constrained range. So let's just real quick, I guess, go over the agenda for the day, right? So today we'll just recap price action. We'll do a quick view of SOXL's price action from a longer term perspective or a higher time frame perspective. After we look at that real quickly, we'll get into our 4-hour markers and triggers and targets. So just looking at today, overall, again, a green day. It was a 2 down, however, so it did break the low of yesterday, or in other words, Friday. Let's go ahead and bring in, we'll even go down to the 5-minute chart. That's how constricted price was today. And so if we look at price action today, we can see here's yesterday's action on the left. We've got today's price action on the right. So we did open down from where price closed on Friday, but we still were within Friday's price action, but it quickly wicked below. Did not have any price acceptance. We do have overnight low right here as well, one of our 4-hour markers. So it's kind of expected that we could see a bounce here. So we got that bounce. It did push up past opening print. So we know the rule, above opening print, we look at buying calls. Below opening print, we look at buying puts. But we look for a higher low to get in above opening print if we're going to get calls. So if we look on the 5-minute, we went up, and again, when we opened, we broke the trigger to the 4-hour time frame to the downside, and we, from our notes Friday, we could see that the trigger for that was 27.19 with the magnitude of 27.07. So we did break below the 27.19, and if you look at the low of this candle, it was 27.03. So it completed that strat, and although it triggered the day strat, again, it didn't get acceptance. So we pushed back up. So we could have got calls here at the higher low on the 5-minute, and if you follow us on X, you can see that we did get in on calls. We had our stop just below here. I think what is the, let's bring up the fibs from the 2024 run up. No, thought we had a fib there at 27.24, maybe not. What is this? Yeah, the 2024 run up. Yeah, this is the 23.6 fib, the 2724, and that's where we got the bounce off of, right? So we got the bounce there, higher low. We entered. We did run into last week's 50% line, which is this purple dashed line. Let's go ahead and get just a little better one here. We did have the 50% line, this purple dash line, as well as the 4-hour trigger to the upside that were acting as resistance. While we did poke above to create the 3 on the 4-hour candle, it wasn't a very big 3 because the one from the second 4-hour candle of Friday was pretty small, the inside candle. If we look at that just on the 4-hour chart, we can see, we had on Friday, the second 4-hour candle of Friday was real small. It's right here. So it didn't take much to go 3. So while it did go 3, or an engulfing candle, if you're used to that term, a bullish engulfing candle, it didn't present a huge range still. So the last week's 50% acted as resistance along with that 4-hour trigger to the upside. So while we did trigger back to the upside, nothing was really seen of it. And you could see that we go back down here to the 5-minute. You really had to stay on the 5-minute in order to, I guess, kind of know what was going on with the day, the price action, whether you're making higher lows or lower highs. So while we did keep our stop just below this higher low here, we did get stopped out after continuously bumping our head up against the 50% of last week and the 4-hour trigger to the upside. When it did break down, we did stop out for a small loss. No big deal. But we didn't enter any puts. So if you followed us on X, we were giving updates, on internals and price action, but we were not getting any lower highs and lower lows. So there's no reason to enter puts. If we also take a look at the internals for QQQ, we can see this is price action for SOXL in the upper left-hand corner. This is the tick Q in the upper right-hand corner. The lower left-hand corner is vol QD, and the lower right corner is ADQD. So just the tick is just essentially like how many stocks are ticking up and ticking down in that minute or 5-minute candle, whatever you set it to. It could be a day, week, whatever. But the ADQD is the market breadth, and the vol QD is basically a measure of like how much money is coming in or going out of the market. Obviously, positive is money coming into the market. 400 million mark is the trend higher zone. So when you see action up here, price is usually pushing pretty hard to the upside. And with the breadth, that's just obviously the number of stocks that are green as opposed to red on the day, right? Within the QQQ. So how many stocks are rising as opposed to, or how many stocks are contributing to the rise of QQQ, I guess is how you should look at it. And you can see we were positive, but not much higher than the 0 line, right? Nowhere close to the $1,500 mark, which is trend higher zone. The tick, for the most part, it was on the 0 line. Had a couple of flashes to the trend lower zone and trend higher zone, and you could see those reflected here in these wicks, right? These just above the range, highs. Those are those wicks, and just below the range low is this wick low. So everything was reflected within the internals, which is why we weren't ready to really jump on any, especially puts, because there were no internals that were negative, right? Even the tick, when it was negative, it wasn't just spending a whole bunch of time down here. It was just going negative and back positive. So basically just running the 0 line, and price action was just going sideways. No lower highs and lower lows. So no reason to get in on puts. You could have continued to try and scalp the 5-minute, just getting higher lows because we were still above opening print. But you're just scalping at that point. You kind of got to load up on contracts to make it worth your while in the dollar profit that you're making, right? So if you're taking these small moves, now if you got this bottom to top, that's what, 27.20 to 27.60. Yeah, it's like 50 cents. So from SOXL's perspective, you could have made a nice little chunk there, but you would have had to, just been playing the bounce. Again, you made a lower low at that point. You had not made a higher high or seen if there was an uptrend here. So obviously you got the lower high here, but you got a higher high here. So the uptrend was started. You could have got in here, but then that cut your range from 27.30 to 27.50 something, 27.60. So again, not a whole lot to do today, which is a little disappointing because, SOXL for the most part, it may go 4 hours as an inside bar or, just sideways, but you usually get one of the 4 hour candles of the day that has some pretty good magnitude. So it was a little disappointing today. This is one of the few days where we didn't, really make any money from an intraday perspective. The long-term swings that we have, January 26, January 27, they're not going anywhere. The September calls we have for September monthlies, September 19th, I believe it is. Those, had their little theta decay over the weekend, as well as the little push down today. So didn't exactly move in the upward direction on those, but they're still in good standing, still in good position. So we remain in those because we don't have anything threatening to the downside yet. If we get back out here, go back to the day again, right? We did go two down. Excuse me. So we went lower than yesterday's low or Friday's low, but we did finish green. So that means the week is green. If you look to the upper left hand part of the chart here, we got the time frame continuity indicators. So the day was green, the week was green, the month was green, the quarter was green, and we're still fighting this year flip here, where the year is red, 28.13. It's all we need to do, get above there, and we flip that green, and we've got full time frame continuity to the upside. But again, we need a higher low above this to give us more confidence to stay to the upside. Now, if this turns out to be a higher low here, it's still close enough to this year flip that it still builds our confidence. But a higher low above the year flip is really a good signal that we should be headed to the upside. We'll test this weekly broadening formation here, but until we get this actually locked in as a higher low, we got to just stay on our toes, right? So the high of today was 27.65. We're at 27.59 right now in the after hours. If we open up inside this candle and push down again for a 2 down, we're further pushing down how far this higher low is going. So we do have enough room to come down, fill this gap that we left from 2 weeks ago, and maybe we dip through it to close the gap, because this is the quarter flip right here, 24.38. The month flip is 23.57. So maybe we wick through it, bounce off of the 23.57, and that's our higher low here, right? That would also bounce us off of this weekly uptrend line. That's a possibility. But until we get this locked in as a higher low, we still have to look at not only this gap, but this gap as a threat as well, which would also create a lower low. And we're just creating a broadening formation from that perspective, right? We've got the week here. Say we were to push to the downside, we would have another, let's get the actual, what we need. We would have another weekly broadening formation here, and it's just showing that the range is tightening, right? So we'd have a higher high. If we do fill this gap, we could make a lower low on the week. And it's not the end of the world, because, say we bounce from there and come back up into the range, we've just got a weekly broadening formation, and we continue to play it sideways, buying puts at the top of the range and calls at the bottom of the range, and just make sure you have time on the contract to give it time to push back up, and have any higher room for pullbacks for higher lows on like the 1 hour, 4 hour, 1 day perspective even. And just ride it back up to the top of the range. So right now it's still just kind of a simple playbook. It kind of stinks because, after watching moves like this and being involved in moves like this and making the money that we make on moves like this, making the money that we made on the moves like this as well, to the downside, buying puts and selling calls, it's kind of it's frustrating, I guess you could say, to just see action go sideways. But if you keep the bigger picture in mind and keep in mind where the top and the bottom of the range are, you can still take advantage of what's going on out there, right? We had the push down to the bottom of the range. We had the push to the top of the range. This big wick, who knows? Maybe that indicates we push to the bottom of the range with the 1, 2 up, 2 down reversal, targeting the bottom of this 2, which is in the gap, so possibly closing the gap. So it's not the end of the world if we go make a lower low at this point, right? Because we did make the higher high, so it's not setting a downtrend in or anything like that. It's just creating a broadening formation. So That's a little bit more zoomed out. If we look at the month perspective, we're still in force with the soft higher low right here and the higher high. So still pushing up in this greater combo 2 down, combo 2 up, targeting the high of this 2, which is 32.64, and hopefully breaching that, triggering the 3, combo 2 down, combo 2 up, targeting the high of the 3, which is 36.15. After that, kind of bets are kind of off at that point. We would have definitely made a higher high in the month perspective, and there'd be plenty of room to pull back. Maybe we fill this gap, who knows. Maybe we continue to push higher and just ride this weekly broadening up to here until we get up to this level and push down. We don't know. We're not trying to predict the future, but that's just right now we're in a bullish pattern, but we want to keep in mind the places where we could see reversal, even if temporary. So that's the month view. Quick look at the quarter. We're still in the 2 down, 2 up. It's still in force because price is still above the close of last month. So we are still targeting the high here of 36.15, which if you think back to the month and the week, those that 36.15 is a higher high there. So if we do reach that 36.15, we're looking to get price action above that to trigger the 1 combo 2 down, combo 2 up. Or if it reaches it in this quarter, which would be kind of crazy, it would just be the combo 2 down, then 2 up. But that, if it does trigger, you obviously target the high of the candle to the left of the 1, which is the 70.08. Yeah, 70.08. So plenty of gaps to fill to the upside. Would be a monthly broadening formation to contend with up here once you got up and filled this gap, or we're trying to fill this gap. But again, that's a long time in the future. And the reason why the year is red on us is because it did trigger the 1, 2 up, 2 down. So again, the 1, 2 up, 2 down, targeting the low of the candle to the left of the 1, which is this candle, which is at 621. Again, we made it to 723, so still had another dollar we could have gone to fulfill the magnitude of this strat. But for right now, we are close to flipping back green, and possibly, we're still got a quarter and a half to go in the year. But if we get this green and make it a hammer, we look at next year going 2 down, 2 up, targeting the high of this 2 to the left of the 2 down, which is at 70.08 again. So just that zoomed out view. Just wanted to take a look at it to make sure we don't lose perspective. Yes, we might have had, excuse me, a down day on Friday and then sideways action today to the lower end of Friday's action, still below the year flip, but it's not all doom and gloom, right? We still have plenty of things in our favor if you're looking for price action to possibly take us to the upside. So let's get in here and move our 4-hour markers for the day. That way we can set our triggers and targets for the day. We've got the previous low of day, activate that and move it to today's low, right? The 4-hour trigger to the downside, activate that and move it to the low of the second 4-hour candle of today. That'll be evident as to why when we get into our triggers and targets. But we take the trigger to the upside for the 4-hour and move it to the high of the second 4-hour candle of today. And then we take the previous high of day and we'll move it to today's high. All right. So again, we saw how today's price action really took into account the 4-hour trigger to the downside and to the upside. They were basically the high and the low of the range, coinciding with the 50% line of last week. So we've got some resistance that we've got to break through. Maybe it takes overnight action, maybe gap up, or at least pushing over that level overnight and opening above that to get that push higher. We've got the hourly broadening formations here that are pretty wide, right? So from the hour perspective, there's not a whole lot going on either. It's just sideways action, and we know that we can still range like this, continuing to go into the coming days, right? We've got other things on the calendar. The Fed is Jackson Hole. So there's things out there that could keep us moving sideways, keep people, not making many moves until we get more news, I guess you could call it. Let's go ahead and take the opening print of today And since it's the opening print for Monday, that's the opening print for the week. So we will just label this as the week of 8/22, and we put it in this red color so we know that it's a flip, right? So we know if price action goes below this 27.10, the week is red. If the week goes red, let's see, where's our month? Yeah, we still got a long ways to go before our quarter and month go red, but we do have the year red. So if the year and the week are red, that puts us in time frame contention instead of continuity. So it just kind of leads to more chop, and so we can't really expect just huge moves, right? Let's go ahead, and now that we've got those set, let's set our triggers and targets for tomorrow, starting with the 4-hour. Actually, we need to mark the week flip. That's 27.10, so it turns red at 27.10. All right, so today's Tuesday, August 19th, or tomorrow's Tuesday, August 19th. These notes are from today, August 18th. Tomorrow there will be 91 trading days left in 2025. The close for today was 27.53. Oops. And so we know that the week will flip red at 27.10. The month flips red at 23.15. The quarter flips red at 24.38. And the year flips green at 28.13. So you can see that little bit of contention still in the time frame. We do have the market maker's expected move of $2.37 this week. If you're not familiar with the market maker's expected move, go ahead and check out our weekend video from this past weekend to see how we know what the market maker's expected move and how we chart it on the chart. On our charts. How we label it on our charts, not how we chart it. How we label it on our charts. So that leaves us with a range for the expected range for the week to be anywhere between 29.74 and 25. You can see we're still pretty much dead in the middle of that. Actually, we need to take this out of here because we don't have Friday's expected move. We'll get that Thursday night. Don't worry about that. Just stay with us through the week, and you will see how we set the expected move for Fridays as well. Those of you like to play 0-day expirations, those are pretty helpful. But we also now know where our gaps, well, not now know, but we keep in mind where our gaps are above and below. We got those labeled out. So we can just take a quick look at our notes throughout the day and know where we stand, just looking at where price is on the chart, let alone what strat it's in, or if it's made a higher high or lower low, or if it's hitting a broadening formation or a year flip or anything like that. We can just look at these notes and have a really quick idea of what we should be looking for, what we possibly want to get into. But yeah, let's go ahead and put our markers here. We have a 3-1. If we go to the downside in the first 4-hour candle tomorrow, that will give us a 3-1-2 down. The trigger being the low of the 1, the target being the low of the 3. So the trigger being 27.32. And the magnitude is 27.03. So this is a green 3, 1, 2 down. We can have some extended targets here. Yeah, since this, to me, if we look at this from a 1-hour perspective, I guess not so much anymore because it's played out sideways so long. But this really looked like a bear flag to me, especially at the end of yesterday. I really thought that we would either break back to the upside, just showing that this is a level of support, right? You can, if we bring things in from the left-hand side, you can see there's a visual kind of level of support in this area, right? Either we bounce off of it or we break through it, right? And if we have a flag, the target, the end target is always, the length of the flag, right? So we would have, like $1 worth back to the downside, but that gives us our 25.45. That also brings into play last 26.04, last month's 50% line. So that's what we've got here as extended targets: 26.04, 25.84. 25.84 is last quarter's high, right? So that's why we've got those out there. Let's go back to the 4-hour candle so we can get our triggers and targets to the upside. Not as much magnitude to the upside, but it would confirm basically a 1-3 rev strat, So that's another one of the basic 6 reversals is a 1-3. If this was, if we were going back to the upside and we had a red 1 and a red 3, that would be a 1-3 reversal back to the downside. But here we have it at the bottom of a downward movement, with a green 1 and a green 3. So price movement up should give us the confirmation of the 1-3 rev strat, pushing us back up to try and target the last week's highs. Again, we would have some stuff to fight through, especially the year flip. It's really been resistance for us in the past. You can see rejection here, rejection, 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 rejection. Finally broke through it, but fell back, and it was support for a day, but fell back through it. So expect it to be resistance again. So we've got to fight through that. We've got to fight through this daily broadening formation right here before we get back up there. Let's just pull up our fibs chart and see if there's anything else up here. Not really anything else up here. But we do see that the expected top of the expected market makers expected move for the week is right up here at last week's high as well. So that'd probably be just show resistance again. The expected move is not fixed. It's not saying like price will not go outside of this. Price commonly does go outside of it like 30-40% of the time, but it's just an indicator of price. I don't want to say a price pivot, but like an important price level basically, right? There's been a lot of, it's basically the high for the range that we've been in for 6 weeks, right? That's the highest it's been. So if we're going to get back up there, we've got to break through there, but we could definitely see resistance. So back to our triggers and targets to the upside. So we would have a 3-1-2 up to the upside, trigger being the high of the 1, the second 4-hour candle of today, and the target being the high of the 3. So this trigger would be, what was this, 2760. And the magnitude would be 2765. 2765. Now, 2813 is probably going to be our first target because that's the year flip. That's what's been our that's what's been our resistance for the last few weeks. 2813. We can have another extended high of the high of this candle because this would be the 1-3 rev strat. So this high is 2871. 2871. We've got 2966 was last week's high, and then 3055. If you're familiar with our videos, you will remember that if we bring out the Fibonacci's from the 2020 low to the 2021 high, let's just zoom you out real quick. Right, we remember what happened in 2020 and how the market boomed, right? So we have our low here, we have our high here, we drew Fibonacci's. The 61.8 has been respected as lightweight resistance here, support for a while, as long as it could, then before it broke through, and then was resistance for a little while till it broke through, support for a little while, then resistance, and then it's becoming resistance again. That's that 30.55, the 61.8 fib of the 2020 low to 2021 high. So we keep that 30.55 in there as an extended target as well. Let's go ahead and pull up the day chart so we can get our triggers and targets to the upside and downside. Let's go back to our let's just zoom in here. Oops. If I can work the chart. Come on now. There we go. So we've got a 2 down, 2 down if we go to the downside. Right? So the trigger being the low of today. Since today was this 2 down, so that low is 2703. Right? That's the magnitude of the 4-hour reversal strat. That trigger is the 2 down, 2 down. Now, because it's not a reversal and it's just a continuation, it's just a 2 down, 2 down, not like a 2 down, 2 up, or a 3-1, 2 down, or a 2-1, 2 up. It's not a reversal. It's just a continuation. 2 down, 2 down. There's no magnitude, so we don't have an exact exit. But what we can do is set targets, right? And we can use major points of price action as those targets. So let's bring out our fibs again real quick. Yeah, we don't really have anything right up in this candle. So that just shows me more that, this is thin structure anyway. If we look at it, let's go to the 1 hour, right? If we look at this, we got thin structure here. There was this wick, but it was like a phantom wick. I don't really know why it showed up on the chart, but it was like on a 1 minute candle. So we have this thin structure to this level. We're already at the top of it, so I don't think breaking back through it to this 2604 and 2650 or 2584 is too much to expect. So we've got 2604, 2604, and 2568 as our extended targets. We won't go too extended with those. All right, we've got our lower low. Let's bring out the day just so we can show. All right, so our lower low is down here, or it's a higher low in this case, but if we were to make a lower low on the day chart, we would have to break the low of this, which is this 22.95. So we keep those in mind as well, just to get a quick note of, is a broadening formation being created? Are we creating a lower low after making a higher high? So let's go ahead and make our markers to the upside. We'd have a 2 down, 2 up, triggering at the high of today's candle. All right, so the high of today is 27.65. It's the magnitude of the 4-hour flip, right? And then because this is a reversal, it's a 2 down, 2 up. There is a magnitude for this, so clear entry, clear exit, right? Clear entry, clear exit. That's why we like reversals, because you have a clear entry, clear exit. When you have a continuation, you have a clear entry, but you only have targets to look for, right? You don't have what the reason why it's a magnitude is because there's a high probability that is where price action is going to take you. That's what the strat is all about. It's knowing what reversals provide the highest probability return to whatever the magnitude of that strat is, and that's those 6 main strat reversals that are in the PDF that I provided. Now there's plenty of people that use this strat out there. They've come up with other ones, the 3-1-2-1-3, and 2-1-3-1-2 and stuff like that. But I like to stick to the basic ones. They're just easy to remember, easy to identify. You're not melding too much stuff together and trying to read too much into the price action. You're just kind of taking it for what it's worth. So that's why we look for these just simple 2 down, 2 ups, or 2-1, 2 up, 3-1, 2 down, things of that nature. So we've got our 2 down, 2 up. The trigger is 27.65. The magnitude is the high of this candle, right? So once you go 2 down and then once you go 2 up, the magnitude is the high of the candle to the left of the 2 down. That's this candle, which is 28.71. 28.71. And then we're going to leave our extended target with this 29.66, which is last week's high, and that 30.55, which is the 61.8 fib of the 2020 low to 2021 high. And then we've got some extended targets of 31.47 and 31.96. Those are from looking left. If we look over here, this is 31.96, the high of this candle, and the high of this candle is 32.64. So 31.47, where do we get the 31.47? That must have been, I'm not sure. Oh, it was a Fibonacci extension that we had. Don't want to draw it again. I think it was from here to here. What was it? 31.47. Was it here? I'm not sure. We had drawn a Fibonacci extension. It wasn't that then. But it was a move similar. Maybe it was front of the gap there. 30.67. No, I'm not sure. But we did have. If we break the 31.47, we got the 31.96. That's pretty close there as well. So we've got our triggers, our magnitudes. These extended targets are just that anyway, extended targets. They wouldn't be expected to reach any of these exactly. They're just extended. But we have our clear entry, clear exit. The week did not go green or red, right? We're 1 on the week. Let's get us a good chart here. Oops. We're a 1 on the week, so we're inside. So we haven't triggered any of the weak strats, right? The 1, 2 up, 2 down, or the 2 up, 2 up, right? So we've got the 1, 2 up. If we go 2 down, then we know that the magnitude is obviously the low of the candle to the left of the 1, which is this candle being the 22.57. That puts us on top of this gap. We could bounce off of it again for like a double bottom, really setting in a higher low instead of the soft higher low that we had. But we'll see. We could break through there and close the gap before we bounce. So if we did that, we're making a lower low. And of course, like we talked about earlier, we're just creating a broadening formation. It's not the end of the world. We'll have to make sure we're buying puts on the way down, giving yourself plenty of time, not buying way out of the money. We're buying at the money or in the money, and we're taking our profits. So basically the same thing as last week, and the week before, because we've been in this range for 6-7 weeks now. 1, 2, 3, 4, 5, 6, 7. This will be our 8th week in this 24 to 28 range. We did have the look above and fail here. We had the look below and fail here, but we've remained true to this range. So even if we do get an update tomorrow, and even breach this 28.13, the year flip green, still anticipate that we could drop back down, right? So you want to make sure you've got enough time on your contracts, but also watching the levels and making sure that you're taking the exits when you need to take them. That's the video for today. We've got our triggers and targets. I'll just go back to those real quick. We know what the flips are for the week, year, month, quarter, all of that. We know what the expected move is. We know what our gaps are, right? So we've got everything mapped out. We're not guessing. We're not predicting what's coming tomorrow. We're just reacting or responding. We're not reacting. We're responding because we're putting thought into this. We're responding with using our triggers and targets, using the 4-hour markers. Making sure that if we're buying puts, it's because we're making lower highs underneath the opening print. If we're buying calls, it's because we're making higher lows above opening print. And anything else around there, we're staying out until the price direction has been chosen. So I hope that everybody's enjoyed this video. If you've made it this far, make sure you give it a thumbs up, like this video. It helps the channel spread, and it's not to necessarily like spread the channel, but it's really to just spread the news about SOXL. It's not a new ETF by any means, right? It's been around for 5, 6, 7 years almost now, I think. So it's got a track record, but it's just, I don't think there's a lot of people that know the risk to reward it provides every day, right? It's a real high beta. Depending on where you're doing your research, it's anywhere between 4 and 5.5 beta on the ETF, SOXL. So you're going to get that volatility. You're going to get that price action. The options delta is high. The theta is low, especially if you're buying at the money or in the money. The premiums are pretty low. Well, I'm not even going to say pretty low. They're low because you have to look at them in perspective of the delta to theta that you're getting. So you can load up on contracts, and what that's a great formula for. So I hope that this, the news about SOXL and using options on SOXL spreads, because it is a way that you can, generate income either on a daily basis or on a swing trading basis or whatever. But it provides that ability to have the choice to use it every day if you'd like, and I just want the word to spread about that. Also, if my trading method resonates with anybody, I hope that it helps you in your trading, and spread the word about it as well, because nothing I'm using is new or breaking, right? I haven't invented anything. I've just layered in a couple of different things to create a method that is repeatable every day, that is proven. I've used it for years, and it generates profit, right, and a good winning percentage. So as you can see, there are very little indicators on the screen. All we've got really marked out is our gaps and the flips and a few broadening formations, and we can already tell where we expect price action to go, and if it does reverse, where we can expect it to go in the opposite direction, and we're ready to respond to either one. So Again, I hope everybody enjoyed this video. Give it a thumbs up. Make sure you hit the subscribe button and the notification bell as well. And I hope everybody gets some good rest tonight and has a good trading day tomorrow.